take it way back. So what we had here was really significant. You'll remember if you watch back on my posts and things like that we spoke about this. Let me just move that out of the way. We had the market pull up to this point. It came in line with various areas of long-term key price action. Okay, and we discussed the fact that if you're ever looking at market history or price history, you know, it's like being a detective. Your job as a trader is to sum up the probability of something happening again. Now, when you've seen it happen various times, that probability inherently rises. However, it doesn't mean that it is a certainty. Nothing in the market is a guarantee ever. And just because you bounced off here several times does not mean you won't go higher. And many of you found that the market did go higher. So though I did say to short here, I said you definitely shouldn't be buying. Naturally, as a trader or someone running a business generally, if you're buying up top here, you would be buying a high price naturally, okay, which is obviously the wrong thing to do. So you could have taken two approaches. You could have taken a light short in line with these previous areas, okay, that would be fit, that would be absolutely fair. Or you could have taken a risk-averse short, given that the market was rallying so harshly. Even if you did either, it doesn't matter because both of them would now be closed out for profit. That's why I DCA and hedge, because it means if I got it wrong here, I can always pick up the pieces there. And if I continue to get it wrong, I can work my way out of the trade. Okay, so anyone who shorted here at 2060 and then 2135 still made a lot of money. Okay, and then when I said to hedge long at this area of early support, or basically start to buy, even if you weren't hedging and you were just buying there anyway, you would now be in gains, and it may be advisable to kill it because you have very slow market sentiment. There's nothing pulling the market a lot, and you're hitting on to very early minor resistance, which I'm labeling now. You can see that on your daily. If you drop to your 4 hour, you can see that there. So it is quite minor, but it is containing price. You've got minor gains there, and it may be advisable to take it. If you wanted to reshort this, I would only do it higher back into where you've previously seen the market fall, because this whole stretch of candlewick represents to you areas where people are starting to liquidate their longs. And when people liquidate their longs, when professional traders, institutions alike say, you know what, we've had enough, you get these spikes in price because they're pulling their orders out. And if you're buying, you will get crunched, and crunched awfully. So on this move here, you've got about $20 of move. Okay, there's no harm in taking it. You're coming to minor resistance, and you are pulling in it quite harshly. But unless you get any rapid change in sentiment, which I'm not surprised you don't have, because you had such a problem here, then it's not going to move. But the thing to learn from this is that yes, we're identifying key resistance long term, key price action levels, places where people have previously looked short and thus are more probable to do so again. Okay, so we definitely shouldn't be buying up here, but we always know there's the caveat that you could get higher than those previous highs. And to be honest, eventually you always will on assets like gold. It has always broken the highs, and it always will break the highs. Okay, so I never say to anyone, look, short, sell the farm, short everything you've got, risk everything, because that is never going to be a long-term process. You're never going to trade long-term simply if you over leverage, and if you trade existentially, as I say, so in the sense that you're basically shorting your life, and if it goes wrong, you're going to lose everything. That is never going to last as a long-term process. And the theory I often use, and what I explained on my other streams, my last streams, etc., is that you need to go on the basis that you're not going to take one or two, you're going to take thousands of trades over your trading career. Okay, and overall it needs to form a trajectory, much like you've seen with gold, really, which is an upwards trajectory with oscillation. Sometimes you'll experience higher drawdown, which causes a dip in your equity, but overall, if you're profitable, sustainable, and most importantly probable, then you will continue that. But you have to contain that within the maximum amount of risk for the variance of the market, because you're always going to have a large swing up or a large swing down. That is just inherent of financial markets, especially things that are heavily sentiment driven like gold. So the pullback you saw came to very, very early support. You've got to remember, and this is really key, you've got to remember that if you are buying up here, you are buying very, very early on in the fall. Because if I zoom out, look where that eclipse is. Look where it is now. It's far higher than the price has ever been. So if you're getting long now and the market cools and you find that you fall lower and lower and lower, you're going to be heavily exposed and you're going to have to do a lot to solve it. So just remember, you had a spike, all-time high, you drop $100. It's not an awfully long way. So any entries you're going to take have to consider that, okay? And you can't exactly see strength here anyway, all right? And it's just because you're lacking that market sentiment that the market isn't ripping back up because people aren't rushing to buy it, okay? So in short, I would expect more or less this to go along slightly until you get a big change. And I would just hold off. I would liquidate your longs because there's confusion in the market for most people. I would just consider lightly shorting anything higher up back into these highs. Don't rush. You know, mainly my approach is risk averse. Personally, I'm a swing trader. I do teach people to trade all styles. But I mean, I don't care. I'm not rushing to short it now. I know you've hardly retraced. You've come to some early KMAs. But I know there's every part of room you could get slightly higher up into the previous highs. My goal as a trader simply is to take market value to the short side when prices are high, i.e. the the common phrase sell high, and I want to buy anything low. So that would mean ideally, if I really wanted to re-long this, I would much prefer to come to your earliest KMAs, your 20 and 40, which comes in line with very early key support. It's lower than you've been, but if you get to this point, you could consider scaling in. Again, it's a risk-averse approach. You don't have to rush to trade this, because if you open up your watch list, trade everything else. Wait till you've got clarity and then enter in the market. But nonetheless, I would much prefer it long if you get a large move down. It's going to bring you to your key 40 MA. It's going to track price very well, and therefore it's much more ideal. If you're just coming in, let's just reconnect. There we go. If you're just coming in, don't forget to press the boost. I've not refreshed it. Thanks to everyone who does press it. And if you are interested in trading with myself, I've put a heavy discount on that link there. If you grab it today and before the stream ends, then you will get on board. I'm going to move the questions to the left. If anyone has any questions, just put them in. Rita asked the VIP trades in what time frame are they? Please, can you re-verify what you mean, Rita, and I can go over that. But just to clarify with gold, I wouldn't be shocked if you re-push into your no man's land, your semi-confusion area, which is the stretch of this. This is the place where people are saying, I don't want to hold my longs anymore. I would rather liquidate, hence the price falls. Remember, if you're pulling off long entries, you are short, okay? If you had it long here, I would consider locking in gains with a trailing stop or an in-the-money stop loss, some people call it. Otherwise, I'm not too interested in rebuying on that candle wick there. Yes, you may have a bounce. Yes, it's minor support. But like I said, I'm far more risk averse. I don't care what happens there. And ideally, I would like more probable entries. And therefore, I would wait for something like your 40 MA coming in line with key support to the left-hand side. You're always using the left-hand view to gauge clearly where there is price action, where there is rejection, because you need rejection to form the basis for a turnaround in the market. I'm still not sure what your question is referring to, Rita. So you have to be 100% clear on that. Just word it slightly different. I know you've said the 1 hour and 4 hour, but I need a question out of that if you can. I will wait for a sec. Or if you want to ask me privately because you're an Academy member and you've paid me, do that. That might be easier. So I wouldn't be shocked because there's no market sentiment if you get intraday falls. Anything higher, I'd rather short. Anything lower, I'd rather long. But I would like either in much better areas. Your better short zone is up there. Your better long entry is there. And of course, anything further, I would continue going. Just check the connection's okay. Everyone can still see and hear me, I hope, I think. So that's gold, guys. Don't forget to get my training underneath. So I'm going to go for